shunning oil stocks could see investors miss out on a top source of income as the price of crude begins to climb, experts say. A chaotic 4 years for the oil industry caused many investors to scarper over fears for its future. The price of crude, measured in US dollars per barrel, tanked from nearly $115 in June 2014 to just $28 at the start of 2016. This was due to a slide in demand and unprecedented competition from US shale gas producers. But this week it climbed above $70 for the first time in 3 years. While the long-term prospects for oil companies are still unclear, as nations try to wean themselves off fossil fuels, these firms still pay healthy dividends, are slashing their costs, and are planning for the future by investing in renewable energy technology. But if you're looking for a safe investment that will tick up nicely in value over the next decade, oil companies are not for you. A deal between the major oil producers to limit supply and therefore boost the price until the end of 2018 may help smooth out those share price highs and lows. Experts are confident these firms can continue to pay such high dividends given their drive to slash costs. Ian Lance, manager of the RWC Enhanced Income Fund, says, in a market where many stocks look expensive, energy stocks stand out as being one of the areas that we feel is undervalued. So how can you invest in oil firms? If you buy individual shares, you have got to be prepared for a bumpy ride as their value rapidly changes. Another option is to invest in a fund that specializes in a basket of oil and energy companies, such as Guinness Global Energy. However, experts say that you should put only small amounts in specialist funds because they can be erratic. Techcology broker Hargreaves Lansdown says savers should look at a good equity income fund that invests in oil firms and a decent variety of other dividend-paying companies. He tips Jupiter Income, which invests £7.75 of every £100 of savers' cash in oil companies. It pays a decent £3.60 income for every £100 you invest. Another of Caliph's tips is Artemis Income. More than 8% of the fund's cash is invested in oil firms, and both BP and Royal Dutch Shell are in its top 5 holdings.